Okay. While I'm sitting in the back, there are a lot of very interesting news, and I will tell you later. I want to keep you hot until the end of this session. Now we'll switch to a panel. We will have today 2 panels and 1 demo in between. Very interesting demo of a blockchain hacker, which I think you will find very interesting. So the panel now is on blockchain and fintech, the financial sector. And the first panelist, she is already on stage, Professor Adam. And I would like to invite the rest of the panelists, so please start walking and take your seat. I will call Anthony de Lannoy. Hello, come please. Jaime Pinto from Hapoalim. And also Lavy Shtokhamer, the head of Finance Cybersecurity Committee, is from the Israeli CERT. At Lotem. Okay, come, everybody, take your seats. קח לך גם אחד שיהיה לך. Oh, Accenture, welcome, how are you, man? Please. So, before starting with the questions, each one please introduce yourself, few sentences, and why it's so important that the team here, everybody, will know you.
Okay, hello guys.
The microphone is not working for him?
Thank you. It's work now? Yeah. Okay, I'm Lotem Finkelsteen from Checkpoint. And I'm here to talk about the threat or the dark side of these coins, all the cryptocurrencies. And I believe that nowadays, no day goes by without hearing about new ICO scams or mining attacks or any kind of these threats. And we believe that in 2018, the cryptocurrency-related threats surpass all other threats available in the arena of cyber attacks.
Okay, is it working? Great. Good afternoon, everybody. First of all, I appreciate you staying over here so late in the day, just before you head out to the weekend. I know that the weather is warm and the beach is calling everybody for nice beverages out there. My name is Jaime Pinto. I am the CTO at Hapoalim, Israel's largest bank. Joined the bank about 2 years ago after spending 13 years in New York, in particular, supporting financial services and Wall Street firms. And during that time, going through the crisis of 2008, I had the privilege to sit, first row and see some fascinating things going on through innovation, transformation of the business, and obviously cyber elements that kept us on our toes. What we do at the bank, amongst other things, I run our innovation lab where we actually took apart blockchain technology and cryptocurrencies to see the pros and cons and formulated the structure to actually have a technical way to adopt it in financial services. So hopefully by the time this session ends, I'll be able to share some of the insights that we saw around that discipline.
Good afternoon. My name is Anthony de Lannoy. I'm an executive director at the International Monetary Fund, where I represent Israel and 14 other countries in the executive board. My focus is mainly on fintech and cyber, and to think about what the benefits are for fintech to the economy, but also to how to manage the risks so that we end up in a state of, in Israeli terms, sababa, and not in a state of balagan. Thank you.
Probably it works. Hopefully, is it working? Yes. Again, my name is Katarina. Good afternoon. I'm interested in blockchain. I would like to say I'm a blockchain enthusiast to know more about this, how to use this in a very good way to make processes efficient, more intelligent. in this way, I involve myself in several initiatives because I think it is necessary to spread the idea of blockchain and how to use this in a very good way. So therefore, I always want to look beyond or dive deeper and to see what's after. Thank you.
Hi, my name is Lavy Shtokhamer. I'm the head of the financial CERT at the INCD. We basically run in for the past 2 years and provide an additional layer of MSSP for the financial organization for the cyber issue, threat intelligence, as well as incident handling. And I'm also, like Yotam, going to speak about the dark side of the blockchain, how basically the adversary and the attacker become more innovative than the good guys, more fastest in implement blockchain technology, as well as the good part of how to leverage blockchain in order to share efficiently and trusted information between one another in the cyber domain.
Hi, my name is John Velissarios. I'm Accenture's Global Blockchain Technology Lead. What I'm going to be talking about is sort of the experiences that we've seen in the market on a global basis, specifically in capital markets, and some of the activities that we've seen in central banks and what's going on around the world. More the positive side, the light side of the spectrum, and some of the efficiencies and gains out of all those projects that we've been working on, and what the upside of implementing blockchain solutions are.
Yes, I will take a mic. Oh, now it's working. Okay, it's fine. So after introducing everyone, what we will do now, but we will need to be quick with the answer, direct to the point, like we like it here in Israel, and not everybody need to answer every question, okay? Because there are enough questions to everybody. Let's challenge you with the first question. You want to ask me a question? Later I will give you the possibility, if we have time. First, in many countries, already we are seeing that people are less using cash, more and more using electronic way to transfer money, especially in China. I don't know when your last visit in China was, they just use their mobile phone to transfer money most of the time. Saying so, and the combination with cryptocurrencies, when do you think banks will issue their own cryptocurrency? One. And secondly, what are the gaps that you are seeing now that need to be changed or overcome to make it faster? Please. First one, take an answer. Which one you want?
Shall I take that? Maybe just because I can talk about the stuff that we've seen with central banks that have been looking at doing similar things. And this is an enabling technology that could be leveraged by many central banks in countries for issuing cryptocurrency for the entire market. So there are two dimensions to this. One is in the retail space and the other is in the wholesale space. The wholesale space is really on the capital markets side of the equation, where we see quite a lot of activity with exchanges, with the clearing and settlement solutions that are in each of the different countries. And they have quite a lot of benefit from an efficiency point of view and removing the need for excess amount of liquidity and also reserves and collateral out of the equation. On the consumer side or on the retail side, there are a few countries around the world that are considering implementing such solutions already. Some in the Nordic countries and so on, where they can take a lot of the, benefit from a lot of the efficiencies of a cryptocurrency already in what's already in a quite electronic country where they don't use a lot of cash. So for them, there are some implications, of course, with regards to what happens when when you implement a cryptocurrency. What does that mean for cash in society, or the lack of cash, banknotes basically in society? And there are some bigger considerations to keep in mind with regards to that as well.
Sorry, I just maybe want to add a couple of things. I think you have to make a distinction between cryptocurrencies issued by individuals or organizations compared to the central bank. And I think before you go to a situation where you have all these private cryptocurrencies taking over, I think you need to find a solution to 5 main problems. I think the first one is anonymity. I mean, there's a reason why we have anti-money laundering legislation. You have to know your customer, and that's what we demand from the banks. And with cryptocurrencies, anonymity is a serious issue. The second one is cyber risks. I mean, all these fintech applications are very interesting, especially in countries where they are barely using cash anymore. But if there's a cyber incident, we may not be able to have a backup system. The third one is decentralization. So many people in favor of blockchain, they like the idea of decentralization. The problem is, you know, if you think back about the financial crisis, we thought we decentralized risks, and that's true. The risk was everywhere. So that could be a problem that we need to look at. The fourth one is universal access. When you think about it, cash is available to everyone. Once you have private cryptocurrencies or you have private applications, let's say there's a rating, and what if you have a bad rating and you're not allowed to use the application anymore? I mean, that would basically stop you from being able to use money. I think the last one is also, and that's probably one of the most important ones from the central bank's point of view, is we would lose the tool of monetary policy. So once central bank is not issuing the currency anymore, then, you know, this is a very important tool in economic policy together with fiscal and structural policy. So that would be something we need to solve before this can happen.
So I'll try to be short.
Please.
Having, you know, representing the retail banking over here locally. I think that we need to split the answer into 3 different topics. I think that the challenge is not technical yet, so we're not quite on that level. The first one is aligning of interests. So going cashless needs, you know, a need from the clients, the customers, support of the government, and then ability from the banking platforms or the banking or the financial services to enable that. But all 3 have to align, and I don't feel that we're there yet. The second element is we need to distinguish between what we know today as cryptocurrencies, the blockchains, the Ethereum, you know, those kind of things where decentralization is a challenge, identity is a challenge, and how you bring that in, or if you can bring that in to the mainstream financial services. And the third one is tokenizing or issuing cryptocurrencies that will align with the fiat currencies. And at that point, before we even go there and harvest the capabilities of that technology, the business model needs to be cleared out. So you need to understand how if I'm creating a crypto shekel now backed by the government, how that aligns with the international framework, how that aligns with the country and everything else. So the business challenges are still unsolved. I'm confident that the technical capabilities can bring us to that level once we align with the business needs.
So, looking forward to have crypto shekel sooner than later. And this will take us to the next question, okay? So those which answer now, please let the other also to give some answer, okay? The next question is the following. Assuming blockchain is really the next revolution as the web, what does that mean to the banks sector? And also, what does that mean to all of us? Katarina.
Probably I can start. What does it mean for the bank sector? The bank sector will see that a lot of their processes, again, process-based, will change. A lot of employees will not be necessary any longer, so we are confronted with that issue. And several of the processes in a bank can be done much quicker and faster as nowadays. So that's, on the one side, it is an opportunity, but a lot of open questions are in the background, still not answered, and we have to take care of them. And sorry, I have forgotten. What was the second part of your question?
Us. How it's influenced all of us.
What is it for us? For us, I think we will not notice the shift so much because for us, we will have a front-end solution, which is more or less an application, and we go on that application and do this as we do it, for instance, nowadays. So we will not see that this is blockchain-based. More or less, we will be able, if we want to analyze things, that we can really do this because it's transparency in the background somehow, and we can see what's going on. But for the common user, it is not necessary to dive into that topic. It's just, okay, it's secure, we can use this, and we can pay like we have done this the years before. And therefore, people will use blockchain technology like they've used every other single app nowadays. So it's front end.
When we refer in blockchain as cut the middleman, eventually, in my perspective, the bank will have to move much faster in order not to lose the market. As we see at the adversary side, for example, that move much more faster. And actually, the recently research from FireEye mentioned that all the market that were on the dark side and sold drugs and malwares are now built into a new platform based on DNS blockchain. DNS blockchain, amazing concept of how to secure internet sites. And as we see, the adversary are using that technology, leverage that technology in order to develop new market side for the dark side, decentralized and undetectable. So as the adversary move forward fast, we expect that also the banks, because there are also many competitors on the good side that could eventually steal the market.
And just
yes,
a moment,
please.
and I believe that the introduction of new blockchain technologies will probably motivate threat actors to hack those technologies, as we saw in Ethereum, which suffered a lot from hacking operations, the Ethereum blockchain, but as well as the users. And I believe that the bank or institutions would have to make sure that that they made great penetration testing before releasing it to market. Otherwise, people would lose their money through the blockchain.
Okay.
Probably, sorry, am I allowed to add something? You talked about the dark side of the internet and the dark side of the blockchain. Let's talk about the dark side of fiat currency. How much fraud, how much, really bad things going on with the fiat currency. And I don't like it that if we always say that, with the digital currency, the dark side of the moon somehow is coming up. It is still there. So we have to find also solutions to get rid of them or to mitigate it. But to emphasize that in this way we can see more the dark side and the evil is there. No. The good guys are still there, and I believe in the good guys.
Yeah, I will not allow you to answer, because otherwise
case.
it will be an interbridge between you, and you can do it back in stage.
Yeah, okay.
Sorry.
Let's move to the next question, and I would like that Accenture will answer it, because he didn't answer until now, and I want you to start with the answer on this, so please. But very good, Professor, for the comment. I like it. We can talk also about, that already blockchain is connected to hackers. I think so. If not, then we will talk about that if we have some time, about how malware's command and control is connected to blockchain. And the next question, can you please point out to a real project which the financial sector implementing and using blockchain today, or to show at least some major change in the last year of banking adopting a blockchain project?
Okay.
Accenture.
So I'll talk a little bit more generally and then pick out a few examples of what we've seen. So since last year, I was here last year at the last CYBERWEEK event. And what we've seen in the last 12 months is a significant uptick in terms of the amount of interest, but also projects, real projects that have been that are rolling out now in the financial services space. Lots in capital markets, lots with sort of exchanges and so on, as I mentioned, as I alluded to before. You would have seen sort of lots of activity that's been happening in North America, in Europe, here, even in Asia, with clearing and settlement systems and payment systems and also exchanges. Most recent one is Project Jasper, if you've heard of it in Canada. That is a combination between the Central Bank, Bank of Canada, TMX, which is the stock exchange in Canada, as well as the payments infrastructure through Payments Canada, to implement a post-trade settlement system using a blockchain solution that takes a look at equities and cash, central bank money. So a year ago, that was inconceivable. Now we're doing it, and we're also seeing things such as exchanges that are implementing shareholder voting systems using blockchain solutions. So not so much on the cash side or asset side, but more about how do you make certain types of processes much more efficient, such as shareholder voting and things like that. So it's all starting off, and it's beginning to raise the bar, I think, across the board. It's becoming more and more mature. The technology is evolving. The applications that are being put on it are much more significant. So it's no longer sort of experiments and POCs and pilots. Things are going into production. Last year, I was involved in a project for a cross-border money movement for a production-grade build-out of moving cash around globally for big banks, and this is real, and it's actually happening. So there's an uptick in terms of the amount of work that's going on in this area, both from an investment side, but also from organizations that are implementing it and making it real for them. So in our view, this year is about making it much more real, and we see production-grade implementations happening.
Mm-hmm. So we have to recognize the fact that from an enterprise standpoint and a financial services standpoint, blockchain is still undergoing the hype cycle. When we talk about blockchain just as a generic technology to implement distributed general ledger, you have to understand as an audience, we cannot take it as is and just run an execution of, an execution script and install it on our platforms. Mm-hmm. It doesn't work that way. So there are many challenges, architectural and conceptual, within blockchain that has to be addressed before we bring it in to a highly regulated, trusted platform as a bank. I mean, when you put money in the bank, you know that the money is going to stay there. And you know that if something's going to happen to it, you're insured, you sleep soundly at night. The technology is still evolving at one pace or another. The potential for it is to disintermediate complicated processes, and we recognize that. And it's also to try and create trust in an automated process, leveraging smart contracts to execute complex financial transactions. So from our perspective, and we already came public with that, we already have a project that we're working on. It's for guarantees, starting with the commercial markets, to issue guarantees within the state of Israel in a fully automated and digital way, running on top of a blockchain platform. Because if you think about the financial model, there are so many players in that, mm-hmm. and you need to disintermediate the players in between and create trust. Having said that, we talked about the risks of identity management, anonymity and all that. That can't be in a financial institution as long as the regulation stays as it is. As long as we're under AML regulation, FATCA, international regulation, we have to know what the money source is, where it's coming, where it's going. But mind you, the first implementation that I propose has nothing to do with a cryptocurrency. It has everything to do with a crypto asset. Not a currency, though. So it's the maturity of the financial institutions that will decipher the way to take it in a very responsible way, step by step. And as we're moving forward, I can tell you, there are multiple challenges with the technology itself that we need to find ways to work around. All right? I mean, just look at, and I'll finish with that because we're running out of time. Just one thing that comes out of the EU, and that is the right to be forgotten. Every EU citizen, resident, member has the right to go to a provider and say, listen, Mr. Provider, take all my records and erase them from your databases. Distributed general ledger cannot erase anything. It just doesn't work that way. It depends. So now we're hearing conversations. We'll appoint oracles that will have the privilege or permission to rewrite the distributed general ledger. So we're centralizing the decentralized network. So it doesn't make any sense. So that's just one of the challenges that we're working through, as I said, you know, in our labs.
Very good comment. And we are shortly, and we will try to do this. Very good comment. I like very much your answer. And the next one, which will answer the same question, please refer also the connection between GDPR requirements and blockchain.
The requirements, GDPR, yeah, that's a big issue in Europe, especially also in Germany. So we are looking how, the risk to be forgotten. That's a big thing, and this is. How can you solve this with a blockchain solution? This is not possible because one of the main thing of the blockchain is that you have the transparency and that you can track all and everything. Therefore, one of the approaches which I see right now in the business is that a lot of people just offer, or startups offer a solution as we do not work with the data from the owner of the data, from the user. We just, you know, are a gateway, something like this, and pass this through, and therefore we have no direct connection. But it's not that solid solution, I guess, and this is an unsolved question for me. So we have to work on that. I have no answer for that, how to fix that problem.
You want? Okay. So, GDPR, compliancy, and anonymization, being able to be forgotten, is a big challenge for those which are going to implement blockchain, which include identity and personal data information. Which this brings us to the next question. Here, there are people which are from the industry, even here in the panel, also in the audience. But we are in the academia. We are at the Tel Aviv University. What you will recommend the academia here in Israel and the rest of the world to do in research to accelerate the blockchain implementation and the blockchain technology?
I'll take that one because we've been working a lot with academia on some of the developments. One of them is actually in how to address some of the GDPR issues specifically. So I think there are a lot of social implications, and if you fast forward the application of this technology 5 years from now, there are going to be a lot of things that we need to think about in the future. So research needs to be there, I think, in terms of that. We're implementing the stuff today, and it's more about industrialization and deployments and things like that. But some of the future-looking topics, the things that we've not really thought about now, need to be really looked at in a lot of detail. There are some specific topics. The data privacy issue, as you can see, is going to become, you know, even bigger in the future. It's not going to go away. It's going to become an even bigger topic. And so how do we address this through research, and how we can apply that research into solutions that can help address this in the market are going to be key ones. And a lot of other ones are regarding sort of the use of money, cash, currency, how far do we go with tokenization of assets, where is this all going to go in terms of that kind of research. I think will be very valuable for everybody.
I would like to answer that question in a different way because I'm not from academia, but I think two of the things that could hold blockchain back is either over-regulation, and the second one is trust issues. I mean, you talked about trust and regulation earlier, and I think this brings us to the question, what should be the role of supervisors, regulators, and so on? And I think it's very important that given all the positive things we see in fintech, all the positive developments on, for example, financial inclusion and so on, we as a regulator, I think it's very important we create the space for innovation, and so that we don't start regulating something we don't understand, and then, you know, it blocks basically the innovation. So I think as a regulator, it's very important that we have a constructive approach and that we work together with the sector, because most of these things that are happening, we don't even understand them. So the first thing we need to do is talk to the sector and understand what's going on, because that is also for us the only way to manage the risk. And that brings me to the trust issue. One of the most valuable commodities in the financial sector is trust. I mean, it takes years to build trust, but you lose it in an instant. And so if something happens, with an application, with a blockchain application, for example, you know, the trust will be gone very quickly, and that would set back all the positive developments we've made so far.
So I just want to add two things. I'll be very short and brief. From a research perspective, and we work with, I personally work with at least 3 Israeli academic institutions on that. The first being smart economy models. So take the economists over here. I'm steering away from technology. Blockchain is an enabler, but really the secret sauce is smart economy. If I want to issue a local currency, a local cryptocurrency on a high level, you know, 10,000 yard view, looking at it from a macroeconomics perspective, yeah, there's benefit. When you bring it down to the details, it falls apart. So it's a question of a financial model and the addressable market. So one model will not work in smaller segments, or will work in smaller communities rather than larger. So the smart economy models is something that academia can absolutely plug into. The second thing aligns directly with what was said over here through RegTech, regulation technology. There is a dire need globally, I emphasize globally, not necessarily here in Israel, to refresh the way regulators are looking at the business models, threats, and all the other trust issues that we have in the financial system. And I think that it should start with some of the challenges out there, because what we see is that when you look at the traditional banking platforms and financial services, being regulated is fine, but then you have another platform rising from the big tech companies that is just flying Mach 2 under the regulation, making headway and re-educating the markets. I mean, almost every big tech company already announced one flavor or two of fintech capabilities. So I think the academia can also help in providing an eagle-eye view around how regulation needs to adapt itself into the global changing of the global changes in the global economy.
Probably we should say that academia, or that blockchain is not a niche product in academia, so we should create an environment where blockchain is something which we work on, and we have to accept that this will affect our life in every situation, more or less. And therefore, I think that it is very interesting to bring blockchain projects to the students, because the students are our multiplicators. They can bring it out to the market. We can educate them, we can help them to understand the technology, we can run some projects with them for a deeper understanding and to analyze, again, the processes. And then they can bring this into the market and help the market to accept and to understand what's going on with blockchain, and not always thinking about the dark side of the moon.
Let me add you another piece of information for that. Do you think that the existing ledgers need a better secure protocols, faster, thinking about much more memory or storage efficiency, or maybe it requires a different consensus?
Okay, so regarding security, it's for sure. We're talking about crypto shufflers, for example. No one knows what is crypto shuffler. Crypto shuffler, it's basically transaction maneuvering that shuffles transactions from the attacker, from the victim to the attacker. So wallets are not that secure. Secure ledgers are being hacked. So from the security perspective, we're talking about a huge concern about the future. And I was recommended by one of my colleagues to use cold wallets. As a security researcher, telling me that disconnect your ledger out of the network, it basically means disconnect your computer and you are safe. So using cold ledgers, it's not a solution. So yes, for sure.
I can take that. I had this conversation late last night on the phone, so this exact same topic came up.
I was thinking that you're seeing football in the night.
Fun, not fun for some of us, I guess. With regards to security, this is probably one of the biggest inhibitors, I think, of wider adoption of this technology. I think that as we sort of start deploying, blockchain solutions and DLT solutions in the market, when we get into this production implementation, we have to make sure that whatever we're doing with regards to key management, with regards to lifecycle management, how keys are generated, where they're generated in secure environments and things like that, and how you manage all of that is a fundamental part of building the trust that this technology is ready for prime time. So I think it's one of the biggest actually topics. It's becoming more and more obvious to the market because we're going out of POCs and into pilots and into production. So now everyone's becoming, well, is the stuff secure, number one. With regards to sort of where that's going, there's a lot of, there's more development now. This is the combination of the security side of the equation as well as the blockchain development side of it, and probably why we're a panelist up on this stage at the CyberWeek conference. And I encourage more and more of this kind of, this kind of dialogue and activity, and also sort of R&D and development to take place, because that's absolutely needed. With regards to things like consensus mechanisms, that's a very specific point, and I'll tackle that one a little bit, especially as you get into private permission blockchain implementations. The consensus mechanism and the kind of consensus mechanism you implement is very much dependent on the trust model and the governance structure you've already defined as part of your permission blockchain implementations. Almost all of the work that we do is in the permission space. It's not in the permissionless space. So as a result, the consensus mechanism is very fine-tuned to be able to benefit from the trust that's already within the organizations that are part of that network. So it really depends on how you actually configure it and who's participating in such an ecosystem that will define the consensus mechanism and the security behind it, and how you put the proper governance in place as well.
Yeah, I want to add that in my perspective, the biggest threat for blockchain and innovation and cryptocurrency nowadays is the reputational damage. When I say reputational damage for the blockchain technology is when we see on the news more and more breach and cryptocurrency stock exchange. Just 2 weeks ago, there was a major breach in North Korea stock exchange. But those are the part of things that actually are the main obstacle for blockchain to move forward. So as for financial institute, the biggest threat is reputational risk nowadays, the same as new technology, new emerging technology, especially like blockchain and cryptocurrency, that their trust is not efficient enough.
So I just want to offer a slightly different perspective into the challenge. First thing is, please understand, most of the banks in the world are still running mainframes at the core platforms. So there is a significant gap when you want to actually move to a real-time, financial system. The challenge is not with the intermediate technology, it's actually in the core systems globally, where you need to do a wire transfer or move money from one person to the other. So there still need to be some changes over there. Happily, it's being covered under the new trend or wave of innovation within financial services that is called open banking. And I think that would be a stepping stone towards that highly distributed, decentralized network, but we'll have to go through that open banking architecture that offers open APIs and takes the financial institutions into that maturity level. And thirdly, I do want to emphasize that we're calling everything blockchain over here, but it's not. The underlying technology is distributed general ledger. The implementation of that is today, the most common implementation is blockchain. There are alternatives. There's IOTA with the Tangle algorithm, so here's where academic institutions can actually help, because today blockchain cannot scale to the volume of transactions that the financial system needs. You just can't, the mathematics doesn't work. Even if you'll have a quantum computer running it, which we'll have in 20, 30 years or whatnot. But even if you have that, there's a mathematical challenge with the way blockchain is implemented on all different flavors that you can't scale up to the volume of transactions that we need to serve. So bringing it down to the realistic level, there are different alternatives that we're seeing out there. And I'm pretty sure that eventually we'll get to the point that we can work with distributed general ledgers. But as I said, the stepping stone towards that is going to be open banking, and we'll see API services and a highly federated ecosystem with much more players surrounding the financial institutions.
I hope that a lot of researchers, not only here, but around the world, will listen to this panel, because really insightful information about as you as industry leaders are seeing the challenges which is needed in the area of research in blockchain. I will try, we have another 1.5 minutes to take a question from the audience, and you wanted to ask a question, but you need to raise your voice that they will hear it, because we don't have time to switch microphone. We try it in the big audience. Let's see, I hope I will not regret it.
Services level. If I need a loan and I don't have the money to invest in the blockchain, where is the privacy, the anonymity, the scalability consideration for loans and credits at the...
I need to stop you, because we need to also to answer to listen to the answer. Thank you very much. First of all, to him, applause. We have just a short answer on that. We want to take privacy on this and repeat the question also. Let's say like this. It built a matrix, a very complex matrix from all the scale that you can even imagine yourself. I think I need a course in the academia to really teach you all the matrix parameters that he put. The main topic, privacy and blockchain. How we can really deal with privacy and blockchain. What do you think? One answer.
Privacy in blockchain?
Yes.
So it really depends. Public blockchain, if you're talking about the implementation around Bitcoin, privacy is not needed because you have anonymity, right? So everything is wide open, and that's the biggest challenge. Enterprise blockchain, once you bring it in, the entire structure falls apart. Just like you said, we need to provide an SLA, so you can't do like a fully distributed system. You have to have an on-off switch, because sometimes you have to take the system down because of cyber attacks, malicious attacks, or whatnot. So the entire foundational elements that you think about the public blockchain do not apply to an enterprise blockchain architecture. All of that changes, so you can actually provide an SLA, provide a level of service, know who's in the system. It's going to be a permission-based system, not a permission-less system. Today you download the client, you plug into the network. With enterprise blockchain, it has to be secure. We're going down the path of building secure networks and segregated clouds and so on and so forth. So there are different layers of architecture that you need to put in place in order to secure an enterprise implementation of blockchain.
Thank you very much to this marvelous panel. Everybody, thank you.